So greetings, Bentley alumni, family, and friends. As always, thank you for joining us for today's virtual event. This is our first of our international series. I'm Emily Williams, Director of Alumni and Family Engagement. Before we get started, I have some light housekeeping as always. After this session, we'll be sending out an email with a recording and a survey to gather your feedback, as well as a link to our next international series, which will be on venture capitalism in the Latin American regions. So keep an eye on your inboxes. Thank you to those of you who submitted questions in advance. Our speakers will address several of the pre-submitted questions throughout the webinar. And if you have questions arise as you're listening, feel free to put them into the Q&A box or in the chat, and they will be considered for response during the session. Lastly, if you need technical assistance, please use the chat box to speak with us directly. My colleague Bethany will be responding to your questions as best she can. And now today's featured speakers are Professor Anurag Wakhlu, Dina Shoman, class of 02, MBA 06, and Abdulla Al-Khalifa, class of 01. Anurag is currently an adjunct professor of FinTech at Bentley and advisor to several startups in cybersecurity, news, and the financial ML/AI space. He brings a powerful combination of both investment management as well as financial services technology experience spanning 25 years. Dina is the co-founder of Verity, a UAE-based FinTech startup that provides a money management app and prepaid card to kids and teens ages 8 to 18, through which they learn to save, earn, spend, and give within a safe environment and controls that parents choose. This is Dina's third financial literacy startup, having been founder and CEO of Naji, a financial education company in Amman, Jordan, and In Her Quests, providing fun financial education products for girls K through 5 in New York. Dina served as executive vice president and head of branding at Arab Bank from 2006 to 2012, where she oversaw the bank's marketing, corporate communication, and sustainability departments. Abdulla Al-Khalifa, Bentley class of 01, oversees strategic communications activities, including investor relations, as well as corporate sustainability and social responsibility functions as the communications and IR director at Zain Bahrain. He is a successful telecoms entrepreneur, having co-founded one of the kingdom's most successful startups, Lightspeed Communications, where he oversaw the launch of Bahrain's first double-play voice and internet service in 2007. He holds an executive MBA from the International Institute for Management Development in Lausanne, Switzerland, and a BS in Computer Information Systems from Bentley. Also, Abdullah serves as one of our regional alumni volunteers at Bentley. So without further ado, I will turn the conversation over to you, Anurag. Thank you all for joining us today.
Thank you very much, Emily. Really appreciate that, and welcome all again. We'll dive right in just to set the context and understand what's happening in FinTech in the Middle East space. Just to give you some ideas, the overall market size, I was reading a report earlier, is estimated to be north of $100 billion. And we were chatting earlier, and Dina mentioned the investment just last year is about $2.5 billion in the Middle East FinTech space. So those are some very large numbers. But maybe, Dina, we'll start with you, and if you can help us set the context. 10 years is an eternity in FinTech space, but maybe 5 to 10 years, give us a sense of how it has evolved in that region, in that space, especially because you've now done several startups and are doing one. Can you help us set the context of how it's evolved in the last 10 years? A little bit of regulatory and what some of your favorite apps might be also.
Sure. So I want to give a little bit more context as well to give an idea about the region and how it developed. So MENA as a region is about 450 million people, and half of the population is under the age of 25. So it's also considered one of the most unbanked regions, especially those countries that are in Africa. So the region has been seeing a lot of focus on financial inclusion strategies on national levels recently. And with the rise of e-commerce and of course COVID, it's forced people to move more into digital payments, move towards going cashless through, although many are still lagging. I remember seeing something about Saudi is about, I think it's the highest adoption of cash, contactless payments. I think it's about 94% with, I think, UAE's second, and I think Abdullah sent us a report about Bahrain. I'm not sure where Bahrain lies, but it's close to that. And so with all these factors, the acceleration of digital transformation has been happening. In FinTech, regulatory regimes actually started emerging in the Gulf region around 2017. And the fintech activity and regulatory development exploded since then, and it's now growing at a compounded annual growth rate of about 30%. So in 2017, the fintech sector raised, like, to put it in context, about $80 million. And as you saw, last year was about 2.1, $2.2 billion. And another interesting fact is still in 2019, fintech's investment in MENA was only about 1% of the global fintech VC investment. So it's still a nascent industry. But there is now a move more and more towards open banking. It's still relatively new to the region, and there's creation of fintech sandboxes to support the ecosystem and whatnot. And you're seeing a number of startups emerge in the areas of things like payments and remittances, especially with a lot of expats in the region. And that actually area is the most invested in. It's about 85% of the fintech investment. I think it was in 2019. You have things like crowdfunding, peer-to-peer loans, whatnot, insurtech, online lending. We're seeing some cryptocurrencies. So there's a number of new startups that we're hearing about. So I think one of the more interesting ones is the cryptocurrency one, especially we'll talk a little bit about that later, because it's something that's still not fully regulated, and a lot of countries are either really for it and coming up with ways to encourage it, like in the UAE, and they're trying to become the hub for that. And some countries that are still kind of testing it out, like for Jordan, for example, only recently they're starting to look at maybe issuing their own cryptocurrency. So you have a company like BitOasis that's kind of like Coinbase. There's like something similar to Stripe that's called Teller. So all these also payment gateways are helping e-commerce companies be able to operate in the region.
Interesting. I mean, there's so much happening there. And, you mentioned 2.2 billion. That's actually the overall global fintech investment last year was 131 billion. So it's actually more than 1% that way. It's
now it's improving.
It's improving rapidly with everything that you mentioned. So maybe Abdulla, if you can give us a slightly different perspective from where you come from your experience and background as to what your take on this last 5 to 7 years and fintech environment development has been.
I think Dina summed it up quite well. My only perspective or maybe angle that I wanted to add to this is, the region had a slow uptake in terms of going digital, right? I even remember reading articles way back in 2015, 2014 when Uber entered the region. They said one of the most challenging aspects of launching a startup like Uber is the problem that they have to deal with cash. I remember the biggest market for them was Saudi Arabia, and cash was king over there. I mean, they predominantly utilized cash as the mechanism for payment. But as the years went by, and I guess around 2017 going on, it kind of really picked up. And I think some of the reasons is some of the governments in some of these countries decided, you know what, we need to capitalize on fintech. It's happening globally. It's untapped. We need to, set out policies and regulations for this. And then you eventually saw, what they call regulatory sandboxes, essentially, right? The Central Bank of Bahrain started having a regulatory sandbox where a startup, can come up, test out their fintech solution with an actual bank. You can give them a period of about a year, and if all goes well, they can go live. And I believe that happened also in the UAE and other markets. And so, that kind of developed and that kind of pushed it further. And then with COVID at 2020, that's a whole different, chapter. And then all of a sudden, there's just been a massive rise in cashless, in kind of digital payments, essentially. So you don't need to transact it through cash. Everything was done online. There was no cash transacted, and it just keeps growing. I mean, the last statistics we've just heard here in Bahrain that we've increased by 30% compared to 2021. I mean, we're in 2022, and I was like, wait a minute, I thought this would kind of slow down a bit now, and it didn't, and it's still growing very, very fast. So, the trend in fintech is still very hot. It's very active, and we've been seeing a number of notable startups as well in this field.
That's fascinating. I mean, it definitely has. It's staggering to see how fast that growth is happening. I mean, I was reading somewhere the smartphone penetration is north of 90-95% in that region, right? And going from a cash-oriented, underbanked, unbanked sort of environment to now, as you mentioned, 30% growth rates in digital payments, that's fantastic, right? And there's a lot more potential in that space. So shifting gears a little bit, maybe back to you, Dina. Tell us about, since you've been involved with startups now, this is your third one, and what's it like to do a startup, get started? What are the challenges you face as you grow, regulatory challenges, entrepreneurship, successive failures? If you can tell us about that a little bit.
Yeah, sure. So as mentioned, my background is in banking. So that gave me a good solid ground to start from when I entering the fintech world. But this is my third startup, but it's the first fintech. The first two were more, one was a physical box. The second was kind of like consulting customized projects. So this is kind of new to me. So just as a recap, so Verity is a family banking financial literacy company. We provide children between the ages of 8 and 18 with a money management app and a prepaid card, based out of the UAE, expanding into other countries soon. We're launching hopefully in the next few weeks, a soft launch. So very excited about that. There were plenty of challenges that we faced. So first was figuring out the regulations, right? Because it's still, open banking is still new in the region and it's not really very clear. It was a bit opaque and what kind of things we had to follow, especially when it came to licensing requirements, and for us, we wanted to make sure to avoid being licensed. So that meant like we should find out ways to not actually touch the money in order for us not to be regulated, because we wanted to be agile. And of course, when you're regulated, it needs a lot of capital, it needs a lot of investment. So we didn't want to start out that way. So that was one of the things. And as well as, the requirements for the know your customers or the due diligence that banks need to be able to open accounts for customers changes. And actually while we were developing the app, it changed last minute. So it actually delayed our app development by a couple of weeks. So because we had to reflect it in our app to make sure that the information was captured. And of course, the regulations are different in every country, right? We're starting out in the UAE, but we're looking at other countries in the region, Saudi, Egypt, Jordan, Bahrain. So that is also like another research project in and of itself. The other part was because we wanted to issue a card, we needed to figure out also how to issue that, right? So because the UAE ecosystem is still moving more towards an open banking environment, adoption takes time. So for the first time, many of the institutions, when we spoke to them, were a bit slow in trying to, give us information so we can figure out what we needed to do. We needed to learn how to get a BIN sponsorship, which is what was required to actually issue cards, and finding the right departments to speak to as well in the banks, and how all the pieces work with the issuers too. Then we need to figure out the best structure, right? Where can we register? What's the best way to do so to enable us to expand into the region in the best way, and as well be investor friendly, a place that investors trust and are comfortable investing into. So for us, we did DIFC. They were very helpful and very useful. They have something called the innovation license. They helped us very quickly. We'd registered online. It was done really seamlessly. And fundraising, of course, because we were pre-launch and pre-product when we did our fundraising. It took some time to do that, and luckily we were able to close our pre-seed fund at $800,000 in November, which was amazing. Now I want to talk a little bit, if we have time, Anurag, about a few mistakes and lessons learned, if that's okay.
Sure,
because that's I think the key, right, in an entrepreneur's journey. And I'll focus more from the fintech aspect as well, because I have so many lessons learned from the other startups too. So the first was really, I would say, like putting our eggs in one basket. So because the ecosystem is still new, we wanted to find the most agile way to do this. So what we ended up doing is we partnered with another startup who themselves are trying to also figure out things. So that kind of like delayed things as they figured it out and we were figuring it out. So it delayed things a little bit, but now things are all ironed out and we're moving forward. So I would, that was a bit tricky and it caused some delays. And from the fundraising perspective, I would say because we were fundraising pre-launch, pre-product, maybe waiting a little bit longer to have something more to show investors, maybe that would have helped the fundraising a little bit more. But the situation, we couldn't do that because just like all the co-founder situations couldn't wait for the fundraising, and we already had put money into starting developing the app and whatnot. We don't regret it. We got where we wanted to, and we're happy to have 3 VCs backing us. So that was really also good. 2 more points. One is we didn't have a technical co-founder or CTO in-house when we started. That was a big thing for investors because they wanted to make sure that the tech is developed in-house and there's continuation and whatnot. Now we have a CTO. He was hired in July, and we have a team with a lead architect and a back-end developer. So that's all set. And of course, without having them at the beginning, it added to our costs because it was outsourced at the beginning. And lastly is maybe push out the product a bit faster, although it's a bit tricky because we know of other potential startups that are trying to do the same thing, and what they're pushing as a minimum viable product actually included everything we're doing. So it was kind of like making that decision. Do you really, really go basic and try something out and then grow, or do you and maybe look less complete than the rest when we launch? Or do we wait and build the features that we decided on? So that was a bit tricky. I mean, we decided to wait and do the whole thing because first impressions also matter to a certain degree. So I would say those were most of the things. Mainly the biggest was the regulations.
Absolutely. And I think the last challenge that you mentioned, that's always a challenge. How quickly do you push him? I mean,
yes.
Several startups myself, that's always a tricky challenge, especially if your competitor is launching way more than your MVP already.
Exactly.
Right.
And it's the first time this kind of company exists also in the region. So it's not like there are others and we're trying to get there. No, it's like everyone's trying to launch at the same time. So that's an interesting dynamic as well.
But still, I think it's fantastic, and big kudos to you to be able to raise 800 pre-money, pre-launch, and pre-CTO, right? That's incredible. So congratulations.
We got the CTO in the middle, so that was good.
That's fantastic. Wonderful.
Thanks.
So Abdulla, give us a different perspective. From the corporate side, you've had experience in the telecom side as well, and again regulations. I think regulations is one of those elephants in the room always, right? No matter where the fintech is being done. What's your perspective on the environment in this startup last few years, let's say?
If you ask me, regulations is kind of the make it or break it situation for startups, and from that perspective. And so you need to have the right, mindset in terms of a regulator, in terms of a country, to say, how are we going to accommodate this innovation? How are we going to accommodate having startups coming in what is traditionally, it's the banking sector, right? And find a level playing field where it's, usher in innovation, but at the same time, make sure that it's safe, it's secure, and it's trusted, and it's not easy. And so it's a bold move for a government to say, you know what, let's create a platform and kind of mobilize the government entities and the banks in coming together and supporting this innovation, right? At least for us, I'm going to talk here, at least here in Bahrain. Open banking has been an amazing policy initiative by the Central Bank of Bahrain, about 2 years back. And, although if you think about it, having the banks to tell them, guess what, all your information and your bank's customers, they're now able to take that data and kind of connect to other banks or to other entities, right? And one of the biggest kind of moves that happen is actually, and related to us, and it's in Bahrain, is we signed up a deal with an open banking partner. Their name is Tarabat Gateway. It's a first of its kind in the region, where essentially we're going to use open banking as a payment mechanism. So rather than, for example, using your debit card or your credit card, you could have your linked open banking, account as your mechanism to pay. So it's a seamless experience from the perspective that you don't have to put in any information or anything of that sort. It sets a new choice to users to go out there and pick and choose, which payment mechanism to go with. Just out of reference, the Robot Gateway raised about $12 million pre-Series A back in November, I believe. I think they're also UAE based as well. I was just surprised. I was like, that's incredible. And so again, going back to the government, they believe that this is the best way forward. We have to embrace change, embrace innovation, and take it from there. And then there's a whole chapter, of course, about crypto. I don't know if you wanted to hear that, or we have another question for that coming up. Crypto is a whole different topic as well that we've experienced as well. But,
yes, yeah. No, we're definitely going to discuss crypto in a few minutes.
Okay.
But you're right. I mean, generally, even globally, payments has been one of the most heavily funded sort of subsectors in fintech, just because the nature of, whether it's global payments, cross-border payments, just peer-to-peer payments, there's all flavors of payments. And that's where the bulk of fintech funding has gone. And, one of the example that you just gave of the open banking where the money can come out directly from your account, let's say, I think that reminds me closest of, I don't know if you've heard of this company or this app called Zelle, Z-E-L-L-E. That's what it's pretty popular here in the US because you don't need a card. It's literally money going out of your account as a debit. Oh,
wow. That's amazing.
It's actually based on a consortium of banks. To your point earlier, banks are scared when a fintech comes up to them and says, give me all your customer data, right? And we'll have a symbiotic relationship with you, but banks are scared originally. But so the banks teamed up and made this consortium saying, we'll create this utility called Zelle, and it's become pretty popular, but not as popular as when any of the big payment, like your PayPals and your Cash
It's
apps.
like Venmo, no?
And
Venmo similar
exactly.
to, yeah.
Right. So this one's more of a different debit. So are these apps, just a brief digression, are these the top of the line or the major mindshare apps that you see being used in the Middle East as well? Or do you have local flavors of these apps, meaning local competitors?
Yeah, I don't think we're there yet. Okay, so open banking as a choice in terms of payment just started recently. And I don't think from a end user perspective as a banking customer, they're not yet, understanding the concept that they have to, submit and allow their information to be taken somewhere, right? There's this issue about how secure this information is, what's going to happen with this information. So there's always kind of an opt-in situation before you can even go ahead with that payment mechanism.
But in Jordan, they did something similar to Zelle. I think it's called Click. It's also a central bank-led thing where anyone can pay anyone anywhere just with, I forget, like either number or whatnot. So something similar. I haven't used it yet, but it does exist in Jordan.
So that does exist as well. So rather than going with the open banking route option and utilizing them, we also have a company called Benefit that basically has this option, payment mechanism called Benefit Pay. And it's the same concept. It's like instant payments and sending cash, peer-to-peer as well. So as Dina said, you could do it by your mobile phone. You just put in the mobile phone number. If that person is already registered, they get the amounts immediately, instantly within seconds. I think the maximum amount that you could receive within seconds is about close to $3,000. And then anything above that, it takes a couple of hours, but within the day, you can have that transacted. So that has been more popular. So you have your local flavors that has more, picked up. And from a regional perspective, I haven't seen yet, and correct me if I'm wrong, Dina, but I haven't seen yet where I could, in a regional level, transact instantly in terms of cash, correct?
No, I haven't seen that either.
I haven't seen this as well. But in our respective countries, that's the case.
Yeah, so plenty of potential for going levels higher, cross-border, etc. One related question came up since we're discussing, payments. This is from Neil. Is there any movement in these apps to provide the benefits that some of the credit card provides in terms of points, travel credits, warranty protections, etc., meaning benefits beyond payments, which would entice a customer to adopt these?
I haven't seen it. I mean, it's mainly used to transfer money between people, so more like peer-to-peer payments. So I don't know how that would apply, but I haven't seen anything, because a credit card, if you use a credit card, it's to purchase stuff, not necessarily to pay people. So yeah, I
didn't mention. Yeah, you're right. Same thing here in Bahrain is that with benefit pay, there is no reason or perk or benefit, let's say, that we can have by using that application. It just picked up immediately back in 2020, just because we wanted to transact cash and there was no other way. And well, there was, but it's just a cumbersome experience. So the app kind of did it instantly. But there is one thing that we didn't talk about actually. Now I wanted to make sure that we're aware of it. Digital banks, or what they call neobanks. I mean, you've heard of that, yeah? So there's been an ushering of these neobanks that have come up in the region. Notably here in Bahrain, we have a bank called ILA Bank, ILA. And it's, they don't have any branch. You can sign up within 2-3 minutes on the app, and you have a virtual debit card, essentially, immediately. And then in that situation, you get benefits. So by using their account, the debit card from that bank, you get all sorts of benefits that way. And so there, it kind of competes with the traditional banks, right? And the traditional banks, I remember back, 2 years ago, had a horrible user experience. Their app was just ancient. I mean, it was like, I just hated using them. I just didn't download them at all. And so
that's the main reason why neobanks are coming to life. Because if they were to, just become a digital experience on an existing bank, that just, it defeats the purpose, right? So now a lot of banks that are coming up that are neobanks are like, we don't have to rely on these old legacy systems. We can, completely change the customer experience, be completely separate, not go through the typical bureaucracy. So yeah, definitely, that's a huge reason why these neobanks are also emerging.
And we're seeing that. I mean, that's one of the reason FinTech has made such big leaps across over legacy banks, let's say, and not just banks, across the entire financial services landscape. Whether you take retail banking, you take insurance, you take trading, you take asset management. I mean, look at Robinhood, right? Look at any of these other apps that are, the mint.com, for example. I don't know if there's, again, local equivalents that are coming to the top in that region, but the user experience is key, right? I mean, I'll give you a simple example. I have accounts with every bank and every trading company practically in the US, just because I love this stuff. I love FinTech in general. And a company like Bank of America, when you scan a check to deposit it, you still have to type in the amount. And I'm like, why? Google can recognize my kids better than I can. Why do I have to type in numbers when I scan a check, while my local credit union app, which is a sort of a non-profit, it's a credit union, their deposit with scanning fills in the whole thing for me. It's a very small thing. It's like waiting those 3 extra seconds at a gas station while your credit card is authorized, which has now become annoying to the millennial generation. Anyway, I digress. But along those lines, what do you think? What do you think the Middle East consumer wants? Like shifting the focus, looking out inward from customer. What are their, let's say, the top 3 in your opinion? What do they want from FinTech in general? Is it just payments? Is it more AI, ML? Those are tech enablers. But if you had to give the top 3, what would that be? And maybe Dina, you can.
Yeah, sure. I mean, first I would go and say security and trust, right? Because there's still that kind of barrier of going digital. As much as it's trying to be pushed onto everyone, there's still a bit of resistance. So they haven't used digital payments. Maybe, still the older generation maybe don't even use credit cards. Protection against hacking, information leakage and whatnot, and still having some sort of bank name or something is a bit of comfort. And then, like you said, the user experience, a good user experience. We're so used to now, like we live in an instant gratification world. We need everything right now and then, and we want it easily. We don't want to have to research and figure out how to use it. We want more options. So that as well. And still, even though we're moving more toward the digital, right, digitization, we still want customer service and support. People still demand the ability to reach a human, to be able to talk to them, and especially more when it comes to money and earn their money. Yeah. So that's still a bit of like, okay, we're trying to automate, we're trying to use AI, chatbots, whatever, but still having that human touch is really important. And they want an easier option than going to a bank, right? They want something, that's done differently, more efficiently, and that offers better options, and something convenient, something we're too busy. We're almost sometimes too busy for our own kids. So it has to kind of be something very intuitive and easy to use. Now, in terms of other things, I think the main thing, and it shows with the funding, right? Payments is really important. How can I pay my nanny or my driver? How can I share a bill with my friend when I go out to dinner? Even as an entrepreneur or freelancer or business owner, what's the best payment gateway that I can seamlessly integrate onto my website for people to pay? That is so important. I suffered through that in my past, in my Jordanian startup. I was trying to figure out a payment gateway, how to do it. If I want PayPal, I have to go to this bank, and I can maybe put it on a credit card, but then I can have to wait, I don't know how many days to get the money. I'm just like, really? Right. When I was in New York, I had Stripe as my, I didn't even have to talk to anyone, right? Just to download it on WordPress, set up the account, link the account, boom, boom, done. Yeah. And it was clear and ready, and the money got transferred every whatever. It was so easy to use. So there are startups that are doing that now slowly in the region, but not in every country. Again, it's so hard when we talk about it. It's like specific countries they operate in, but then it's not even regional. So you don't have, it's not seen as the US, where it's all the 50s, whatever, all the states together, yeah, that it serves. And we are so many countries, and there's no one seamless way to do these kind of things. So I would still bet on payments, really. With all the other things that I mentioned, especially security, that's really key.
Yeah, and it's interesting you mentioned Stripe. Stripe's mantra is to essentially, now they just say, you as a startup, focus on your core competency, whatever that idea might be, leave the entire payments infrastructure to Stripe. Yeah. That's literally their motto. Right?
And now they're in the UAE, right? They're here. So, yeah. So yeah.
Abdullah, what's your take on from the consumer angle and what's happening, and maybe even from the investor angle?
So I can't go beyond. I have to agree, definitely the first one that Dina mentioned, which is security. It's one of the most important aspects for users. When they talk about banking, it's the first thing that comes into mind. And I'll be honest with you, and I think, Dina, you've probably experienced this already within the region. The number of phishing scams saying that they come from a bank, right? And they call you up has been alarming. The amount of numbers calls that we get, the classical way, they call you through WhatsApp, telling you that I'm bank, whatever, can you give me that code that we just sent you? And then you think it's the actual bank, you give them the OTP code, and all of a sudden there goes your account. So security is such a fundamental thing. I can't underscore how important that is. Once you overcome that and you manage to secure that with the user base of customers, then it's not so even about payments. I think payments, I think we have a lot going on with payments, at least in the local sense. Regionally, we don't. I think there's a definite room for expansion there. I really hope one day we get to see a startup that can help us in that area. But payments is kind of, there, and I'm sure all the investors are looking at, you know, that level of, you know, who's out there doing payments. The one area that I think is promising is customer data and AI in terms of knowing customers' habits and anticipating how they can manage their wealth, essentially, right? This information, I think, if unlocked, is something that I believe users will just jump on immediately, right? And you could see that with some of the startups that have done that in Europe, in the US. I know one example of a European, I think they're in the UK, that basically scans your kind of habits in terms of your usage, and gives you recommendations about saving, about getting better deals. They found out that, oh, you're getting your, you know, your insurance from X company. By the way, you know, if you want better insurance rates, there's another company that can do that. And you could just imagine the possibility there, right? You could link companies, kind of saying, oh, can you access, this is open banking, right? Can you access the information of the user base? And if there's an opportunity for us as an insurance company to provide a better deal, put us in there, right? And as a user, it would be great. I mean, I didn't have to hunt out to find the best deals out there, right? Insurance, telecoms, whatever, health, whatever it may be, yeah. And I could get that instantly in my account, and then subscribe right there and then. I mean, that's the beauty of open banking ultimately, right? And so I think that AI, customer data, using that data information to unlock, you know, kind of trends and information about you for saving purposes, for getting better deals, you know, is something quite promising, I believe.
That's interesting because, you know, deal sites are some of the most popular sites, I guess, all over the world. I think everybody wants a deal, right? Whether it's a financial, save a few percent here, get cash back, get bonus points. Even the question earlier from Neil was around, what else do I get besides the convenience of making a payment using an app, right? Can I get frequent flyer miles, etc.? Everybody wants a deal of some sort. In fact, I think 2 years ago, one web-based widget deal provider was acquired for several $1 billion. It was crazy. So I think deal, and it's interesting you mentioned the amount of information that you can pull up by just connecting to somebody's bank account, right? I mean, Plaid, which is, you know, now a $5.5 billion infrastructure company that is inside like Venmo and all of these other fintech apps to a large extent. Whether the person's employed, how well they're employed, how frequently do they get employed. There's so much insight you can get just by connecting to the bank account, right? It's right. Interesting. Just a little bit, if you can touch upon maybe Dina and Abdullah, what's the investor view? I mean, especially since you've raised money recently as well. How are the investors different? Are they not different? Do they all want the same thing? What's your take on the investor mindset of that region?
Sure. I mean, investors, it really depends on what they're looking for. I mean, some are looking at, you know, crazy growth and exit. Some are more hands-on, some are not hands-on. But I mean, at least in the stage that we were in, pre-launch, pre-product, the team was a big thing that they looked at, you know, the background, the synergies, the experience and whatnot. And is this the team that can actually make this happen? Of course, the opportunity is a big thing. They need to see how big the opportunity is, as well as what other similar companies have done around the world. So for example, for us, it's like in the US, there's Greenlight. In the UK, and Greenlight is now a unicorn. They do similar things, and they have also investment modules. In the UK, it's GoHenry, and GoHenry has also now entered the US. They're also expanding. They are a unicorn itself. There's so many other companies around the world. Monzo, Mosper, FamPay in India. So there's this model is well known. So it also helps them understand it better to see what could be done. Of course, the tech, as I mentioned, that's a big thing. As a fintech, the technology, the CTO is in-house, developers are in-house to kind of mitigate the risk of that as well. agility is really important, right? How quickly can you change? How quickly can you adapt and even pivot if you have to? And I think something that maybe not all of them completely understand, although if they really are in the fintech and they've been doing it a lot, they do, but some angel investors might not, is that the regulations change. It's up and down, right? But it is moving forward, but it's slow, and that could cause some delays. So I would say that even, I would ask that most investors look at the startups, what they're asking for, and make sure that they are well funded to survive such delays, and to make sure that they have enough to be competitive enough with their peers. Of course, also depending on the model. So it really depends. I mean, for us, we had a mix of, we have 3 VCs, and each VC is so different. And a bunch of angel investors, and all of them are different. So it really depends. But these are core things to think about, for anyone who's starting a startup in a fintech, is, have the right team of founders, the tech in-house, define the opportunity properly, show how you're agile and what your plans are in the long run. Where can this go? And for them to better understand, try to find something similar if it exists, so that they can know what the model is and what the opportunities are.
And do you feel they primarily took the view across the VCs and angels that you had? Did they take a long-term approach, saying, hey, you could be the next green light of the Middle East and then beyond? Or are they saying, exit in 2 years and get acquired, right?
No, I mean, I think the quicker, bigger exit, of course, the better for them, because they get the returns on their funds. But no, they do look at that. At least for VCs, what I've seen, right? And we have one VC that's more like it's kind of an initiative with USAID, and so it's more about impact and creating jobs in Jordan and whatnot. They have their KPIs, they ask us to report on them and whatnot, but they're not really looking at an exit, they're looking at the impact that you're doing. So you also have those impact sort of investors as well. What changes are you doing? What positive impact are you making, and how are you measuring it and whatnot? But yeah, a lot of the VCs, they understand, they're looking for an exit, they're looking to make back their money and more, they need to close their fund. Because that's what they do. It's a game, right? They invest on all these startups, hoping that 1 or 2 really make up for the fund and more, so that they can continue. So yeah, it all depends. And that's really important that you bring that up too, because when we were talking to investors, it was so important to understand, what are they looking for? How involved are they? What kind of reporting do they need? And what's important for them to make sure the fit is proper as well. Absolutely. Right? It's a marriage too. I mean, these people are going to be emailing you, calling you. Are they the type to relay like every month, what's happening? Why didn't this happen? Or are they like, listen, guys, what's going on? Okay, how can we support you? Oh, we thought of you because, we met these people. We thought it would be a good connection or whatever. It's a big decision to make when you're choosing your investors as well. So
absolutely. Abdulla, do you have an investor perspective, a different one?
All I can add is, they wanted to see if you've tried it and tested it. And the best places for these are these regulatory sandboxes, right? There's a huge rush these days I've been seeing with fintechs, startups, in giving a try, give it a go. And I'm not sure how it is in the UAE and other markets, but at least here in Bahrain, usually there's an accelerator as well, or a co-sharing space of sorts, where they actually open doors for you, right? And so while you set yourself up as a startup, getting all the licenses and everything, you get your regulatory sandbox application accepted, start testing your application with actual banks, and at the same time talk to investors. Get them into the game, get them into what you're trying to do. And as you proceed into completion at the regulatory sandbox, that's where you get your investments coming in. One example of this that I see, and I remember seeing them. I mean, they were quite small. I mean, they were just 2 or 3 employees. Rain, which is a cryptocurrency exchange that started back in 2018, I believe. They started in an accelerator, very small entity. They were testing their exchange, payments and everything. And all of a sudden, I was reading the other day, they've managed to they've raised about $110 million, 110 million in Series B funding. I was just astonished. I was like, wow, where did that come from? And just 3 years ago or 4 years ago, they were just starting up as a 2-person company. And so you need to have a platform to test out. So, for example, regulatory sandbox, and have a place, a co-sharing space or an accelerator that can open up doors for you to investors. Just test and refine, and all the other aspects like getting your team in place, getting your CTO, you have to get that in order as soon as possible, of course. But yeah, that's how I see it as well.
So it seems the government is encouraging by some of these regulatory sandbox, or whether it's a public-private partnership kind of thing, they want to encourage this kind of fintech development, right? Providing them, there's famous accelerators here like Y Combinator and several others, right? But it seems there's also sort of local flavors of these that the government is encouraging there as well.
I would also add the same comment I said about the investors to these accelerators, because again, it could be the wrong fit for you. It could be a waste of time. They could be taking too much equity. Same thing. So it's really important to kind of get to know them and research and talk to others who've gone through it and understand what it entails, and so on and so forth, because you don't want to waste your time. You don't want to be going with the wrong one for you. Waste your time, and maybe they take too much equity sometimes as well.
Absolutely. I think fit at all, especially in a small startup, starting with your co-founder fit, right? Because you said it's marriage, it's actually much more than a marriage, because you probably spend a lot more time with your co-founder and the initial sort of senior folks of the startup than spending family time, at least for the first few years, I guess. So the fit is super important, and absolutely it falls over into the investor connections as well. That's a big part of it. So talking about, we mentioned crypto a little while, and Abdulla, you mentioned crypto questionnaire as well. So tell us about the state of crypto. I mean, it's the elephant in the room. Like, everybody wants to know who's trading, who's hodling, is it banned or not? What's the regulations on that? So what's happening with crypto in that region?
So let's step back a bit. Okay, I don't think we've even mentioned about this, but trading apps like Robinhood, for example, which is, I've been reading about it, which is crazy in the US. In the Middle East, in the region, we don't have something close to that, or even similar to it, right? And so, although we are aware of businesses out there, we are aware of the stock market, but there's always this cumbersome situation of going through banks and trades and so forth. So the moment cryptocurrency exchanges came out, right? So that was kind of parked aside. When crypto exchanges launched, it just skyrocketed. And you would think, you're like, wait a minute, crypto exchanges are way more unstable, more, kind of like, volatile than stocks. And so what is happening? And so there's a massive appetite for trade, right? And it just happens to be in the situation in the Middle East, in the Gulf region, that crypto exchanges just mushroomed. I mean, in terms of popularity, and companies like Rain or CoinMina or BitOasis are just a few of so many crypto exchanges that all of a sudden expanded from the Gulf region. Rain is now located, they have opened up offices in Turkey, which is incredible. And then they've just opened up in Pakistan as well, as a crypto exchange as well. I mean, which is incredible. I didn't imagine, 3 years ago, a company as small as Rain, expanding in the Middle East region. And so all of a sudden, crypto exchange, there's an appetite for investing in it. I mean, there was this discussion I had with our team recently in the company. We haven't met. I mean, we were all remote, of course, as you can imagine, and we just gathered recently as a couple of us staff. And the first topic that comes into mind is like, oh, by the way, did you get the chance to go into crypto? Wow. And the first thing that comes to mind is like, oh yeah, we've used this exchange and that exchange. So it's everywhere. Crypto exchange is catching up like crazy. And the governments are taking a watchful eye. They are making sure that these exchanges are not just secure. They have to have their own assets in place and their books in place to make sure that they're running a proper exchange. And at the same time, they're also exploring their own digital currency as well. I mean, they're thinking, okay, if it's that active and people are comfortable with trading with crypto, maybe we should consider as a government to have our own cryptocurrency. So in our case, the crypto dinar, for example, right? And so that's something that is being explored right now, and I'm anticipating to hear in 2022, one of the governments, or maybe a couple of them, either in the UAE or in Bahrain or in Saudi, where they will announce having a government-backed cryptocurrency as well. So it looks like it's a popular option, if we can say it that way.
If you can call it investing, so for now.
Yeah.
And Dina, what do you see from do you see a lot of talk about that, a lot of chatter, even in the, let's say, the younger generation, for example, your target demographic?
Yeah, definitely. Especially, I mean, I've come across many adults who are like, my son is like trading crypto. He's only 13 years old. I don't even know what crypto is. Or like they're buying and selling NFTs. Like, what's going on? I don't know how they get their hands on it and how they're able to do so, honestly. I mean, it's something to investigate. But it is very popular, and investing as a whole is very popular as well. I've experienced it, especially with the teenagers. When I worked with teenagers, that's like the most thing they want to learn about, whether it's crypto, whether it's stocks, whatever it is, they just want to learn about it. So that's something they're really hungry for. We do have a couple of apps that also emerged that are non-crypto. I just want to add that are Baraka and Sarwa. These are like stock trading apps now in the region. I'm sure there might be more, but these are the ones I'm familiar with. And so that's also growing. But in terms of the region, I think that, generally it's limited progress, right? Because it's really, and there's a lack of clarity on the regulations and things that are moving slowly. So I looked up a couple of, let's say, milestones or events that's happened over the last few years. So of course, Abdullah, you probably know Bahrain in 2019 made crypto-centric businesses legal, with the permission of central bank. And in the UAE, Abu Dhabi Global Markets issued regulations around crypto because they're actually trying to position themselves as the crypto hub of the Middle East. And Dubai Multi-Commodity Center is where like a lot of those blockchain, decentralized finance startups are actually licensed to operate. And then you mentioned BitOasis. Yes, it's one of the first exchanges that were fully licensed, and they've gotten all their license, and they're based in the Abu Dhabi global markets. In Saudi, they've moved towards forward in blockchain with real estate tokenization and using crypto as a payment method. And Qatar allocated $2.3 billion to digital spending, including blockchain, AI, and cloud. And more recently, so Jordan, it's been like, illegal to I think either do an exchange or trade in crypto. But now they're looking to actually, like Abdullah was hoping for, issue a digital currency that's backed by their Jordanian dinar. They're actually looking into it and researching and how to do it. So, but I would just want to add, because of course I wouldn't give it justice, because since I'm in financial education, the crypto danger is real. And I think that's a big reason why there's still slow progress and not as many regulations, and the regulations might be unclear. And the key is really financial education. So to understand these types of risks, right? Because as you mentioned, crypto is highly volatile. It's based on supply and demand mostly. It's something intangible, right? And it's on a 24-hour non-regulated market. So you can like fall asleep for 15 minutes and things could go really either way. You have no idea and you have no control, and there's no insurance. It's not insured in any way. And I think the main fears as well is it can be used for criminal purposes, right? Because you can mine it, you can do whatever and be able to use it for any money laundering and whatnot. And another thing that a lot of people, I don't know if a lot of people realize, actually mining cryptocurrency uses a lot of electricity. And so generally it's not good for the environment anyway, although now there are like more environmentally friendly, they call them green coins, cryptocurrencies. But that's also another factor to think about when dealing with cryptocurrency, and also when maybe governments are looking at it and how to kind of mitigate it and make sure that it's not like horrible to the environment with all the effects and electricity that it uses. So yeah, I don't know the future of it. I think somehow it will be accepted in one way or another, but once it becomes regulated, then why have it in the first place, right? So now it's no longer its own free currency. So it's also interesting to think of it that way. It's like they're trying to regulate it, but then it's just another currency. So it'll be really interesting to see what happens with it.
Yeah, no, I think definitely, and to your point, what the future, I think it's easier to think about the future of what broadly we cover as crypto, as if you look at blockchain and NFTs and some of those things, I think those technology and the enabled sort of functions like, staking, yield farming, and NFTs actually have a lot of good uses. Meanwhile, the shiny new objects like Bitcoin and $69 million Beeple art NFT sales, those are shiny new objects which are distorting this entire market right now, or the perception of this market, right? But underlying that blockchain technology, for example, I think it's here to stay. It's as revolutionary as the internet was 25 years ago, right? Just the underlying technology and what you can do with that, in not just in finance, but in supply chain, in disintermediation of the middleman and things like that. Meanwhile, people obviously, like every hype cycle, get sort of distracted by a shiny new Bitcoin or meme coins. I mean, meme coins are like Dogecoin, and these are Shiba Inu, are just insane in some ways, right? But anyway, yeah, it'll be interesting to see how this plays out. I think central government digital currencies, central bank CBDCs are definitely going to come. I think some amount of regulation will help in that space, because that brings some sort of legitimacy, as well as, avoid things like big hacks and rug pulls. I mean, hacks can still happen, but rug pulls and things like that, just like the SEC was formed in whatever 1940s, and that brought stock trading to some kind of regulation, etc. So I think it'll help. But yeah, it'll be interesting to see what the future holds in that space. I also think we're coming up on time. I think we have covered a lot of questions from the Excel. If there's any other questions, we can go. But meanwhile, just maybe 2 or 3 closing takeaways that you would like to give for budding entrepreneurs, especially in that region, or people looking to either start up in that region or invest in that region. What would you say? Maybe we start with you, Abdulla.
Study the market in terms of opportunities of, for example, is there an accelerator, a FinTech accelerator or not in that respective region, right? Compare between them, look at what's right for you, right? Secondly, look at what's going on with the current FinTech companies over there. Scan the market, understand what's going on. I mean, knowing this situation in 1 week, the next week you have a different set of startups to deal with, right? You have to do your homework before you jump in. Third, I mean, FinTech as a sector, there is no, maturity in sight, to be honest with you. The sky's the limit in terms of possibilities of what offerings you can provide in FinTech. It's still a very early on kind of sector in the market that everybody is just looking at in terms of what we could do with information, financial information, make it easy for customers to transact, it just takes a quick couple of minutes to realize the gaps, and you're like, you know what, let's go into that, and let's go, deep into that. And I think